Good afternoon, everyone. I think we're going to get going. It is 4 o'clock in the UK, and welcome to today's webinar. I'm Robert Levy, the Executive Partner of Kuits Solicitors in Manchester. Investing in the Israeli technology sector has long been a lucrative opportunity for UK investors, with the country earning a reputation as a global hub for innovation and entrepreneurship. With a thriving startup ecosystem, a highly educated and skilled workforce, and a strong culture of collaboration, Israel has become a hotbed of cutting-edge technology, attracting investment from all over the world. In recent years, Israeli tech companies have made a significant impact in a wide range of industries, including cybersecurity, health tech, fintech, and more. The country is home to some of the world's most innovative and successful technology companies, including Waze, Mobileye, and Checkpoint Software Technologies. This webinar will provide an overview of the current investment landscape in Israel, highlighting the opportunities for UK investors. We'll explore some of the key factors that make it an attractive destination for investment. Our expert speakers will provide insights and practical advice on investing in Israeli tech companies, helping you make informed decisions about investment opportunities. It will give you the tools and knowledge you need to understand the Israeli tech market opportunity. As valued clients and contacts of Kuits, most of you will be aware of what we do and our long history as a Manchester commercial law firm. We were very proud to recently be recognized by Newsweek as one of the UK's 100 most loved workplaces, ranked in the Times Best Law Firms 2023, and as a top-tier firm in Legal 500. And Manchester, of course, is itself no stranger to the world of tech. In 2022, Manchester tech companies raised a record £532 million of funding, which was a 50% increase over 2021, and more than many major European cities, including Rome, Brussels, Warsaw, and Lisbon. It's the fastest growing tech hub in the north of England and the biggest outside London and the southeast. There are currently over 1,600 startups and scale-ups in the city, employing an estimated 60,000 people. Manchester has now produced 8 futurecorns, that is, fast-growing tech companies expected to be worth over $1 billion in the future, and 6 unicorns, including connected car data platform Wejo, the fintech interactive investor, and data center provider Telecity Group. Kuits has placed itself in the center of this space as a UK Lawyer 200 firm with specialist expertise in contentious and non-contentious intellectual property and corporate finance. We're representing founders and investors across the tech spectrum, and we're regularly asked to input into investments overseas generally and into Israel in particular. For that reason, it's been vital that we're able to partner with Israeli professionals who know the landscape. And we're delighted that we've been able to gather together a panel of them today. They'll make their presentations, and please put questions in the chat so we can pick them up in a Q&A session at the end. Our first speaker is Hadar Solomon, a partner in the highly regarded Israeli law firm of Cohen, where among other key roles, he's head of the China desk. With almost 25 years of experience, Hadar is a highly skilled Israeli high-tech executive and a senior corporate, commercial, intellectual property, and technology transfer partner. Among his other involvements, Hadar also serves as an executive management member and legal counsel of some of Israel's leading high-tech companies, among them Luminis, Israel's largest medical device company, ESC Medical Systems, Laser Industries, and Actel Limited. He also served as the CEO of Etrog, a Swiss intellectual property commercialization and management company, overseeing a large IP portfolio, licensing it globally, and collecting royalties. So please welcome our first speaker, Hadar.
Hello, everyone. Thank you, Robert. I'm delighted to be here together with my partner, Doron. who would speak later on, and with Israel Josovic from the BDI firm. And I'd like to give a short presentation relating to basically the Israeli high-tech industry, the opportunities in this industry, and why is it such a good opportunity right now, actually, to invest in Israeli tech companies. So let me share my presentation. Okay. So you all see the presentation, I assume? Okay, so what you see in this first slide is the center of Tel Aviv, the center of the center of the business in Israel, and I would say also the center of the high-tech industry. And this high-riser building is we are right now right here where you see the arrow. So if you come over, that's where you should go. Okay, so basically, let me just. Okay, so I would start by saying how come that Israel, against all odds, has become the startup nation. So first of all, you can see the territory. The Israel is like 0.2% of the territories of China and the USA. So they are 400 times larger countries. Actually, from the windows right here, I can see most of populated Israel just from the windows of this office, of this floor. And then in terms of population, you can see we are 140th of China, 133rd of the US, and 1/7 of the UK. And that's taking into account that about half of Israel's land is a desert. So, and yet, Israel has become the startup nation. So when Bill Gates visited Israel in the 80s, he said, there is a greater concentration of talented high-tech manpower in Israel in comparison to other countries, almost to the extent of Silicon Valley. So basically, this has started in actually in the 80s. It started in Israel. Actually, when I was vice president in a company then called Latzer Industries, the term high-tech was not in existence. And that's when things started growing and flourishing in Israel in terms of the tech industry. And today, we can see that in Israel, there are more than 5,000 startups. Israel is number 3 of companies in terms of the number of companies listed on the NASDAQ. There are over 400 research and development centers in Israel. And Israel's investments, the government investment in research and development is one of the highest in the world. It's 4.5% of the GDP, compared with 2% in China and 2.78% in the US. And Israel also is number 1 in the world in terms of the R&D intensity and research concentration, meaning Israel has the highest number of scientists and technicians and engineers per capita. As you can see, the Bloomberg Innovation Index ranks Israel as number 7 in the world, among the 10 most innovative countries in the world. Actually, Israel was already number 5 in 2019. But still, in this chart, you can see that the U.S. is not around, and no offense, the U.K. is not in the top 10, and Israel, I would say, already traditionally has always been in the top 10 most innovative countries in the world. And from Israel, amazing developments have grown. For example, the PillCam, that's a camera that you basically takes the video and transmits the video of your digestive system. It started actually as a development for military purposes in Rafael, Israel's R&D arm for the industry, for the military, and other very interesting and worldwide used developments include Netafim, which are the advanced irrigation systems, Waze, which is the navigation application, which was acquired, by the way, many years ago already for $1 billion US by Google. Wix, which has the application that anyone can have and develop and come up with his own website. And also Mobileye. Mobileye is a leading company in the autonomous cars industry. And like many other successful Israeli tech companies, it was acquired just a few years ago for $15 billion US by Intel. So today, Mobileye is an Intel company. You can see that there are a mass of multinational technology companies operating in Israel. I've also mentioned some of the UK ones, Finastra, Imagination, and the banking, Barclays. So Israel really became a world center for global tech companies for their research and development activities. And in fact, there are in Israel around today around between 250 to 300 international development centers in Israel. You see that not many of them are yet from UK companies, but I think it's growing, and that's something very positive trend.
Hadar, I'm sorry to interrupt you. The slides are not changing at this end. I don't know if you've tried to change them. We're still on the Bill Gates slide.
Oh, okay. That's good that you mentioned. Let me see now. Okay, let me see new share maybe. You see the slides?
Yeah, we've got the Bill Gates slide.
Okay. Just a minute. I will reshare. Okay. Is it moving?
Yes. Well, we've got Startup Nation slide.
Yeah. Okay, great. So actually, but you did hear me, right?
We did.
Okay, so these are the slides. Just followed what I mentioned regarding the number of startups in Israel, regarding Israel being the number 3 of the in terms of the number of companies listed on the NASDAQ. That there are over 400 R&D centers in Israel, and then I mentioned that around 250 to 300 of them are R&D centers of international technology companies, and the fact that Israel has probably the highest per capita investment and GDP investment in R&D as government investments and encouragements for this industry. And then I mentioned that Israel is number 7th in the Global Innovation Index by Bloomberg, and that I mentioned some of Israel's amazing and very well-known innovations around the world. I think the last of which I mentioned was Mobileye, which has been acquired by Intel for $15 billion, and now it's a Intel company subsidiary. And here we see, the mass of or some of the international technology companies, including some UK companies that you can see here on the left, and the research and development centers of Israel, of global companies in Israel. And Israel Israel adheres to the OECD Declaration on International Investment and Multinational Enterprises. So, and Israel is a member of the OECD, and that's also something very encouraging for European companies, for OECD companies, to open and operate their branches and technology centers in Israel. And now I would like to mention why we think that right now is actually a good time for investing or for finding excellent technology investments in Israel. And the reason is basically because of the decline, or some say the burst of the bubble that existed maybe up until 21. So, for example, in this slide, you can see the decline in the number of exits of Israeli companies. Exits could be an IPO, could be an M&A, could be a full acquisition, and you can see here that there is a decline between 21 and 22. Take into account that this decline actually started only after the first quarter, as we will see in a minute, of 22. And I think our feeling is, we don't have numbers yet for the first quarter of 23, but it seems that the trend is still applies. And here, for example, you see the decline in investments in Israel between the years up until 21, and then from 21 during 22 onward. You can see here the decline after the first quarter of 22, which was actually still an impressive quarter in terms of exits of Israeli companies. But then you see this decline. And something very interesting you can see here, this green line, I hope you can see it. It's the number of rounds, number of investment rounds in Israeli companies, and the bar below, the bar beneath it, is the dollar amount of this exit. And you see this gap. This gap means that each exit or each investment in this case was in lower amounts. So while the decline in the number of deals is relatively not so exciting, but the amounts, the total amounts invested in Israeli tech companies during this period is more material, which goes back to what I said, that right now valuations of companies, of tech companies, has become much more sane, much more reasonable, and much more attractive, together with the fact that since there are less investments at this time, each investment is, there is a greater hunger by terrific Israeli companies for getting investments at this time. Here, for example, we can see capital raising by unicorns. Unicorns, as you probably may know, these are companies which have a valuation of more than $1 billion US. And you can see also here the sharp decline that basically in the valuation of these companies, because of which, first of all, there are less deals in investment in these companies, and also the valuations for these investments is much, much lower. So while you're, as Robert mentioned, I think I can give you one tip or one idea regarding how you can relatively safely invest in technology companies, because the big question is always, not only in these times, maybe less in these times, but the question is, am I really investing in the right valuation? I mean, these founders of the company, or the executives of this company that I'm considering to invest in, because they have a great product, great technology, and maybe also some success and revenues, and they're valuating their company in I don't know, $20 million. And how can I know that I'm not throwing my money and I'm investing $5 million US in a company which is $20 million in valuation pre-deal, prior to my investment, meaning that I will be getting 20%, because after my investment, the company would be of a $25 million valuation, and I'm a 20% shareholder. Did I do a mistake? So for this purpose, there is a contractual mechanism which is used more and more for investing in early stage companies. It's called SAFE, which stands for Simple Agreement for Future Equity. Basically, the idea is that you don't have to set a valuation for your investment. You're putting your $5 million into the company in a methodology which is similar to a convertible loan. Basically, only in the next round of investment, when the company becomes more mature, and hopefully there are more factors on which you can build a reasonable and true valuation of the company's business and worth, and only then you would get your shares based on the next round. However, since you were the first to invest in this mechanism, you would also be getting a discount on the next round. So if the next round is let's say for $20 million, and the next investor puts $5 million, they would get 20%. You will get 15 or to 25% more in the company because you were the first to put. So basically, this is kind of a protection for the founders and for the initial investors in early stage companies, in order to make sure that as much as possible that the investment was done in reasonable valuations. So let me tell you just in a few minutes about the Israeli entrepreneurs. So the first feature of the Israeli entrepreneur is the chutzpah culture. I think I don't have to explain, but basically it's the ability and even the wish to always dare to try something new, not to feel that a failure is a problem. It's actually the daring and the chutzpah makes you want to learn from any failures and go on. And also, we're still a young country. We're still a young country, and the building of Israel from scratch that made everyone go into the in the mode that you have to find solutions and fast. And an Israeli entrepreneur always thinks out of the box. We call it Rosh Gadol, big head. Okay, meaning you always don't go by the book, and the rules were made to be bent, not to be followed. And also the fact that most of the Israeli entrepreneurs have a military background. As you know, in Israel, it's at least a 3-year military service, compulsive, and therefore, actually, when you're in the army, you get a lot of skills of teamwork, of leadership, and as I said already, daring, and et cetera, et cetera. So you see here some true but funny things about the ingredients and the habits of the Israeli entrepreneur. And you know, he thinks out of the box. He's hooked to a device, and he always has with him in his bag. He always has the iPhone or the Android phone, and he has an elevator speech always ready, and also a one-pager about his company. So after I made this presentation, I was thinking to myself, how would I convince you that I'm objective? Maybe it's just me. maybe it's not objective. So I asked someone who is the most impartial and objective in the world, more than any person in the world. I asked him, why is Israel attractive for investments in technology companies? Okay, and this is the answer, the impartial answer I got. It's totally impartial, more than an answer that you would get from any person in the world. At the end, of course, I will tell you who gave me this answer. So, the answer goes like that. Israel has earned a reputation as a hub for innovation and technology, which makes it an attractive destination for investments in tech companies. Some of the key reasons for this include highly educated workforce. Israel has a highly educated and skilled workforce with a large proportion of its population holding degrees in science, technology, engineering, and mathematics. A strong culture of innovation. Israel has a strong culture of innovation and entrepreneurship with a high number of startups per capita compared to other countries. This creates a favorable environment for the development of new technologies and products. And access to capital. Israel has a robust venture capital industry with a large number of investors looking to fund innovative and promising startups. This makes it easier for tech companies to secure funding for their operations and growth. And also, I should mention the Israeli government funding and support, which I mentioned earlier. And Israel is in a strategic location, crossroads of Europe, Asia, and Africa. And we see it today with the Abraham Accords, together with the Emirates and companies in that area. That's something that's ongoing and growing. And the government support, which I already mentioned. These factors, along with a strong track record of innovation and success in the tech industry, make Israel an attractive destination for investments in tech companies. And now I owe you the answer. Who gave me this terrific question? It basically supports everything I said earlier, and that's the identity. It's the ChatGPT. ChatGPT search engine, artificial intelligence in its best, and you know, we as technology people living in the technology area for most of our career, we always trust technology more than people. So I thank you very much, and I look forward to connecting with you and hearing back from you, and enjoy the rest of this webinar.
Thank you very much, Hadar. Israel Josovic is our next speaker. He's a partner in international tax at BDO Israel. He has over 10 years experience in international tax and specializes in providing specialist tax structuring and ongoing advice to outbound investments for Israeli residents abroad, as well as inbound investments of foreign residents in Israel, working with private and public companies. His expertise includes treaty interpretation, implementation for cross-border transactions, and he has argued cases successfully in this regard with the Israel Tax Authority. He lectures at various tax conventions in Israel and at the College of Management Academic Studies. Ladies and gentlemen, please welcome Israel Josovic.
Hi, good afternoon, everybody. Glad to be able to take part in this webinar. Perhaps just a little bit of background before I make a presentation. So actually call myself Mancunian. I was born in Manchester, but I've lived in Israel since 1991. And just small correction to Robert, I've been in international tax since 2005. So it's a little bit more than just the 10 years. And I'm happy to be able to make a presentation here this afternoon. So I will just share my screen just a second. Okay, so are you able to see? I just want to double check that everyone can see my screen. I presume we can. And I'm going to discuss a little bit of the tax aspects for foreign investors who are investing in the Israeli high-tech industry. So my first aspect I'd like to talk about is the tax benefits we have under our preferred tax regime. Historically, this tax regime was more for manufacturing activities. The world was more centered towards manufacture and less technology. And we had, for many, many years, we've had a tax beneficial regime for manufacturing activities. But recently, it has now transferred to what we call the preferred technology enterprise, which allows for very significant tax benefits for technological companies. So amongst those benefits, we have a very reduced income tax rate for companies that are, abide with the conditions to be a preferred technological enterprise, a 12% in corporate income tax rate, and that's instead of the regular 23% corporate income tax rate that's currently in Israel. You can have even a further reduced tax rate of 7.5% if your industry is located in what are deemed the development area A's. There are generally in the north and the south that have these areas which we want to encourage employers to employ individuals there and to set up their businesses there, and thus the income tax rate is further reduced. The big benefit here for foreign investors is a very reduced tax rate on dividend distributions, which is down to 4% withholding tax. This withholding tax is going to be instead of the regular rate, which is between 25 to 30%, and unless, of course, it's a tax treaty. However, if you do not, that requires that 90% of the holding in this industry is foreign resident. Otherwise, we have a still reduced rate of 20%, but very often your tax treaty can reduce that even further, depending on where the particular investor is resident. Now, in order to get these benefits as a preferred technological enterprise, you need to have certain aspects within your business. It has to be your R&D expenses are at least 7% of the annual turnover, and it's calculated on an average 3-year examination. You need to have at least 20% of the company's personnel to be technological employees and not administrative or others. So these are employees who are employed for R&D mainly, and that their wages are actually R&D expenses and recorded as such in the financial statements. You need to have at least 25% of the turnover derived from the export of that technology. So it could be licensing the technology or other uses of that technology developed within the company. There is particular regulations if the company is both holding an IP, but also undertaking manufacturing activity, and you have to allocate some of the profit to the manufacturer, which does not benefit from this significantly reduced corporate income tax rate. but rather has the regular tax applying to it, and that it's given a fixed profit margin of 10%. The rest can then benefit from the reduced 12 or 7.5% tax. The income has to be linked to this, what's called preferred IP. In very broad terms, we talk about patents or software developed by the company, and that would fall under that definition of a preferred IP. If an enterprise will have both this preferred technological aspects, but will also have other activity, then you have to actually attribute the income based on those two types of income, and make the attribution based on the economic what actually is being produced by each aspect of the enterprise. So this is one thing at the corporate level, that corporations in Israel undertaking technological activity can have special tax benefits, which of course make it much more attractive to investors, and in particular foreign investors. But also, as foreign investors, Israel has exemptions for capital gains when you sell securities in an Israeli resident company. So as long as you're not a real estate company or companies engaging in real estate or natural resources and those aspects, your sale of shares in the company at a future date can be exempt from Israeli tax, which is very attractive for investors resident in low tax jurisdictions that would then have an issue with any Israeli tax, which is not necessarily creditable for them in their home jurisdiction. So this exemption takes that out of the equation, and they're just left with whatever their local tax would be on their capital gains. Now, I just want to mention, Hadar mentioned the SAFE agreement. So just to kind of put in perspective, the SAFE agreement, which generally is a provision of funds up front and then converted into equity at a later date, generally that's not deemed to be a loan. It's rather deemed to be an equity investment. But sometimes you have to be a little bit careful on the wording of that SAFE agreement, so that it should not be implied that there would be an interest due on that loan, which is viably payable at any time, which could be challenged by the Israeli tax authority, saying that at the actual conversion, you're really converting both a principal and an interest element, which then could trigger a withholding tax on that element. As I say, generally, when it's just simple agreement to get the discounted equity in the future, it's not usually challenged by the Israeli tax authority and actually viewed as equity, which then allows you to have the total exemption when you finally sell those shares with some sort of pre-tax at conversion. But as I say, sometimes you just have to have a quick look at the conditions within that SAFE agreement to ensure it's purely going to be viewed as equity and would not be deemed as having some sort of loan aspect within it, which then is converted and potentially could be subject to some tax on an interest element. So getting back to the capital gain exemption, so that's applicable really to any investment in an Israeli by a foreigner in an Israeli company, unless this investor has some sort of permanent establishment in Israel and that's active in making the investment, or if it's some sort of acquisition from related parties. Generally, these things are not relevant to a simple investment by a foreign person or entity in an Israeli company. And as I said before, the exemption will not apply if the Israeli company holds or has held a real estate or rights to real estate. So again, another advantage in investing in Israeli non-real estate technological companies will be a future tax exemption on the sale of the shares. The third aspect I would like to discuss is the capital venture funds. Capital venture funds will generally be allowed to have a tax ruling, providing them with beneficial tax. Again, the exemption on the capital gains will generally be available in any event. However, because capital venture funds are very often managing their investments in Israel, there's always a risk that perhaps some of the investment will be attributed to this management activity and maybe not subject to the regular exemption when those shares are sold by the capital venture fund, which is why the rulings allow for that exemption despite having a local management company. Generally, the condition is that there is such a company in Israel, and that's taxable on management fees that are generally charged by the venture capital fund on their investments. but the future sale of the shares, whether it's by the investors themselves via the capital venture fund, or if it's the actual GPs with their carry and whatever investments they have, that's generally going to be exempt from tax. And on occasion, you could actually even get an exemption from withholding tax on dividends and interest, subject to what exactly the investments are of the fund and how they're being made. But as I say, you could even get within that tax ruling exemptions on interest or dividend income that's deriving from the investments. This is generally all wrapped up in the tax ruling. The tax ruling may have other conditions, and this is something that, as tax advisors, we are very frequently achieving for our clients, whether to actually apply for the ruling and get a tax ruling for them to the maximum tax exemptions available. So, as I say, it's a very brief overlook at the tax aspects of investing in technological companies, and happy to advise further anybody who's interested in any of the expanding on any of the tax aspects and overall advising on investments in these Israeli companies. Please don't hesitate to reach out, and I'll be happy to assist. Thank you very much, and good evening.
Thank you very much, Israel. Doron Latzer is a founder and partner in the global corporate practice at Cohen. He has over 29 years of commercial and corporate law experience, working with family offices and international companies, both as in-house counsel and outside counsel. His work includes advising Israeli and US early stage companies and assisting them with all their legal and commercial aspects. He also consults family offices in their fund-to-fund or direct investments, and multinational companies with the initial setup of their Israeli operation, be it acquisition of an Israeli startup or organic growth. He's been involved in serving as chairman of private equity holding companies in the Netherlands and as a director in several firms in the field of renewable energy and project finance. He's also an angel investor, specifically for Israeli and US startup companies. And he's a mentor at the Microsoft Accelerator program in Israel, Ignite Intel for Startups, Techstars, and the PropTech Zone Accelerator. Doron Latzer.
Thank you very much, Robert, for this kind introduction. I rest my case. I mean, what should I say next? It's nice to be part of this webinar. And actually, I started my legal career in England. I studied at the Leeds University. I did my LLB there. And later, I became a barrister in the Middle Temple. And 6 years after spending in the UK, I moved back to Israel. I'm an Israeli attorney, and I'm also a US attorney. I spent many years between Israel and New York. And in the last almost 20 years, I spend about 3-4 months a year in New York. That is my background. As Robert said, also I was the head of a family office in the UK. I am involved on the investment side very heavily personally, and also on behalf of other funds which are set up, whether it's Hong Kong money in the US or hedge funds in the States. But going back to the Cohen, which I'm one of the members of the founding members, we from the day one wanted to set up a different law firm, and we imitated the US firms, Wilson Sonsini or Cooley, in the early 90s to set up or cater for the Israeli technology sector. And as such, we are a bit different from other Israeli law firms. So in general, we are one of the big law firms in the country. And where we differ from other law firms is that we are both IP and commercial under one umbrella. In Israel, like in the US, there are patent agents and there are solicitors who do the commercial work. We decided to follow the American model and have it then joined to be really a one true stop shop for our clients. On the IP side, we became the biggest IP shop in Israel. And on the commercial side, we are one of the top law firms. Also, we are different in the respect that we are international, the only international law firm. We very early found out that once the companies grew and moved particularly to the US. We lost our clients to the big law firms in the US, and we kept with the limited work in Israel. And that's the reason in 2004, we actually opened our first office in New York. And fast forward, we have over 80 people now in the US, in New York, Boston, and Los Angeles. And we have also an office in London. That's where we are geographically based. We obviously are a full service technology law firm, and where we help our clients most is both on the tech side. We have a CRM system whereby we connect startups to investors and investors to startups. And if anybody of you are interested to get on our CRM system, we would be more than happy to put you on. And if you tell us what you are interested to invest in, at what stage and what sector, we will be more than happy to add you on. We work with all stages of companies. Early stage companies is something that we actually go to Excellent Services Center. So we are with Microsoft Accelerator, with Intel Ignite Accelerator. We work with the 8200 Cyber Unit. I'm one of the board members. Techstars. We are the legal advisors for the Weizmann Institute Tech Transfer System and for the Technion, and so on and so forth. If you have any questions, we work obviously with many foreign investors who like to invest in Israel, and trying to give them not only just information about the direct investment, but also helping them in scouting the right companies or teaming them up with other funds in Israel who would like to co-invest with foreign investors. If you have any questions in that domain, you are more than welcome to approach Hadar Solomon, my partner, or myself, and we will be happy to hop on the call and give you any answers that you may have. Thank you very much, Robert, and we're here to answer any questions.
Thank you very much indeed. Appreciate it. Before we take questions, and may I remind you, there is a Q&A box somewhere on your screen. Please feel free to put any questions in, and I'm sure Doron, Israel, and Hadar will be very happy to try and deal with them. And also, of course, we'll be able to connect you up with them after the call. If that's something that you want, just contact me if you haven't got the contact details from the screen. Before we go to Q&A, Ian Morris was a partner at Kuits for many years. He will be known to some of you. He headed the intellectual property practice here. He advises on the protection of all aspects of IP, and in particular, he's been litigating IP rights for 50 years. He made Aliyah in 2020. Since then, he's been a consultant to the firm, liaising on our behalf with clients and professionals in Israel or undertaking Israeli-related business. Ian.
Thank you very much, Robert. Just a few comments, ladies and gentlemen. Good afternoon to everybody. There is no doubt that Israel presents its own challenges. And that's why I'm particularly enthusiastic about our collaboration with Cohen in helping to source startup investments. I would like to particularly stress that they can advise and help with investments in high-tech companies at various stages of maturity and as part of a balanced investment portfolio. I think it's particularly important in dealing here in having a trusted advisor to help guide through the process. And you've heard something today about the types of agreements and tax benefits. You can make contact with us with Cohen directly as indicated or through us, and we'll be happy to assist you with that. One of the things to remember is that Israel has a very sophisticated and full protection of IP rights. And of course, a lot of the inventions will be subject to international patent protection. Living here and reading about the topics covered on a daily basis, I remain amazed at the breadth and scope of Israeli invention across so many fields. I hope everyone has found this seminar as informative as I have. I would particularly like to thank our speakers and our marketing teams who have helped arrange this webinar, Noam and Jenny, and Eleanor and Charlotte. Back to you, Robert. Thank you.
Thanks, Ian. There are questions. Can I start? And gentlemen, Hadar, Israel, or Doron, whichever one of you thinks it's appropriate. Could you share any insights you have about crowdfunding in Israel for tech companies?
Yeah, I can do it. I mean, unfortunately, you can't see the next room, but we have now about 200 people from our crowd, a cocktail party in our office just now. We are hosting the Latin American investors for our crowd in our office. Our crowd, or any mass crowding investment, is a good tool for people who wish to taste the investments in Israel or in anywhere else with small checks. Usually funds have a minimum threshold for investors to come in, but if somebody wants to put a smaller amount, our crowd or any other platform would be a good place to be in. They usually have very good access to deal flow, and they have a professional team. And you can see the track record. So like any other investment vehicle, you have to check the track record, but it's certainly an option for smaller investors to participate.
Thank you very much. And in terms of, you touched on this, Doron, but in terms of connecting people who want to invest with potential targets for investment, you mentioned a database. Can you elaborate a bit about that?
Yes, so the database is really an internal database for our firm. We have in the database, we have our clients or potential clients who wish to become our clients that is on the startups, okay? So in technology companies or entrepreneurs on various levels, whether it's round A or seed, who wish to raise money, and they come on our platform. So we get all the details. We know who the founders are, what stage they are, what field they're in, and how much they want to raise. And on the other hand, we have investors who not necessarily our investors. So, sorry, not our clients. So we have all sorts of investors who know, who we did deals in the past. So we know exactly what they're interested in. And once we have an ask from a particular startup, we don't just connect the two, we go back to the potential investor, send up a deck, which we don't take any responsibility, but we get it from the company, we send it out to the potential investor. And if the potential investor is interested to hear more, we connect the investor with the startup.
I would like to add that regarding our client base, we have an advantage that others don't have. Mostly, or in many cases, clients come to us even before they establish a company because they have an invention that they want to protect with a patent. And so we are kind of the first to know about new and attractive technologies, and we know them in depth, because for applying for a patent, you have to have a totally technical, scientific description, and therefore our client base is not just what you would find on the news, but it is much deeper professionally and technologically.
Thanks very much indeed for that. I think that is it in terms of questions. It just remains for me to thank everyone for joining. Thank you to Doron, to Hadar, to Israel, to Ian for speaking, and I hope that we'll be able to present on a further occasion to showcase some of the successes that our clients have had in investing into the market. Thanks everyone and good evening.
Thank you.
Thank you.